Hello everybody, welcome to my new Sunday market breakdown. So we'll start with the DXY. So with the DXY, what can we see? We are still in a downtrend. We have this bearish W here, first leg, second leg, third leg here that can play out, and now we're making that pull back. Our first um, our first structure support that could become resistance didn't got respected, so we went till that daily previous structure from that bearish W. That's what I was saying previous week also. So we have also a bullish candle. We can potentially go till this weekly highs and then potentially go to the downside or from that daily first point of structure. We will see what will happen there. If I take my Fibonacci from the whole leg high to a low, the 61.80 didn't got tapped, so we still have some room, but we can go to the downside also. So if I go on the daily now, what can you see on the daily? Clear bearish W, very also a big one. This is a very big bearish W, big pattern also. You have your impulse, and after impulse, we can see that the price is now moving way slower than this impulse. So the price is doing more time to make this correction. So after impulse, we most of the time receive a correction. And now I was expecting to tap this support that could become resistance. And this candle is already already showing itself that the bears could kick in because it went like a doji kind of doji to the downside, and not yet a red candle. So if you take your fib from this low to this high, you had almost a minus 27 fib completion, I guess, also almost. Maybe we can tap that also, but on the 4 hour, it's the more important stuff. On the 4 hour, you can see every time like this, we had an impulse, then correction with the trend. We went to the downside correction then. So there was a correction. So the price didn't want to move back to the downside because it was too slow. We went impulsively. So after an impulse, we can see a correction. So if this moves also corrective, then we can forecast another impulse. Or we can make here a smaller bearish W also here now for potentially making that correction, and then that impulse is also possible. So yeah. So the first, I have just two pairs for this week. The rest need to have some more development. So Euro USD, this one is the best one to choose. So on the weekly, what can we see? We are in a bullish trend. We have this first leg, second leg, third leg, fourth leg coming back till this week is supply and demand. So this is acting like resistance, resistance, resistance here, support, and the candle is rejecting from that with that ascending trend line from this smaller bullish M, as you can see. So it's a very nice trade for me. Looking at it, and you can see I drew here also a horizontal line, and you can see it's holding the price here as resistance, support, resistance, resistance, support, resistance. Then here some support, again resistance. So it's a very nice supply and demand zone, as you can see. So then I went to the daily, and what can you see on the daily? You have here your bullish M. So you had here your weekly bullish M. You can see it also as a daily bullish M because I just see this as also one leg, then the correction, descending channel, then upside impulse correction potentially. Price is moving a little bit slower, but it's a big pattern, so we need to have a change in direction or reversal sign. So what can we see? I drew this daily IC, daily zone, because we are making this smaller bearish W against us. If you touch this daily IC, I will not looking anymore to take any long trades because this zone is playing against us for potential more downside momentum. So we have that retrace candle already, that bullish candle for that indication. So, and now we can make the pullback till this kind of decel zone, nice aligning with that bullish candle close, because on the 4 hour, it's a nice reversal pattern in the form of an inverse and shoulder. So if you look, you have here your shoulder one here, head, shoulder two with some resistance in the head. And I will take my limit on the highs of the IC because the price likes to reject or tap the IC. So between all the red candles, you have one blue candle. So it works like a magnet mostly of the time. And the price likes to reverse on it to the upside, to want to go to the upside. So around 3% till this IC level also, it's very nice aligning. We have already a 4-hour red candle, so this can potentially come from impulse and then correction, fake out flag, potentially then impulse. This is what we can see right now, potentially for Euro USD. Then EURNZD, this is an yeah, more risky trade, I find. So on the weekly, what can you see on the weekly? Yeah, we have all the criteria, 4 of the 4 criteria, because we are still in that yeah, bullish M trend. We have the year also the same highs. Here, same highs. We can expect also same lows eventually, because we have already a red candle. But this candle gave me a sign that the bulls are still present, because it came all the way back from the upside till the downside, and it closed right here. So this candle went all the way back till this low, and it closed back right here. So there are still some buyers, because we have also this bullish M here sitting that activate the buyer for potential more upside momentum. You have also this weekly trend line here holding the price up like this. You can draw it a little bit better like this also. Yeah, you can choose. So we have that pattern, we have the trend with us. We have, yeah, that candle can be seen as a blue candle because the bulls are still present and the pullback is higher than 50%. So yeah, so and we need to tap also the minus 27 of that weekly from this low till this high. Minus 27 needs to complete. So very nice. So and on the daily, what can we see on the daily? On the daily, you can just throw it down here better like this. On the daily, what can you see? This bigger yeah, bullish M here from that weekly that you can also draw from the daily from this low till this high, because this was our latest high that got broken. So we need to draw the fib now from the low till the high, new low high. So what can potentially can play it against us is this shoulder 1 region, head shoulder 2, which can play against us for a potential impulse, and then correction that can play further out this correction. So this can be also your false break of these highs, where the bears kicking heavily from, and now you have here these 7 shoulders. So it's a more dangerous trade to take. On the 4-hour, you can see it already slowing down here. Maybe you can also take here the short diesel. You can have here the deceleration 1, 2, 3, 4. Deceleration like this. 1, 2, 3. So one red candle after this opening of the candle, and then the fourth one you can enter till this inverse and shoulders potentially 2%, around 2% would be enough. And then you can enter your hedge for that long, because the weekly is sitting with you till this zone, because you have here stop loss on this under this beginning of correction. And then you have this kind of shoulder 1 here, head, shoulder 2 that can play with you. After that impulse, then you can potentially make here that correction. So we will see what will happen there. So these are the 2 trades I'm looking at for a moment. So I hope you liked it, and see you next week, guys. So have a nice trading week, and see you next week. Bye.